Hello traders, I'm Jolie. Welcome to my channel, the Trading Zone. In today's video I'm going to share with you my trading plan, the tools I use, and how I plan my trades and set up my trading plan for the day. This trading plan is for S&P 500 and Nasdaq 100 futures, and it's for Monday 1st of June. I like to use 3 different time frames, the 4 hours, 30 minutes and 5 minutes chart. These are to try and figure out what's happening with the market in the short to medium term. And I also like to use a price chart and an order flow chart, which is I'm going to drop the order flow shortly, but a few things I want to explain first before I do that. The current chart that I have at the moment which is the Nasdaq 100 June 2021 contract. As you can see, there's a plain chart right here. There's nothing else, just the price. And what I'm going to do next is I'm going to drop in an indicator that I use, which is reorganizes the price structure of this H4 time frame, and it makes it much easier to organize and plan my trade, looking at the longer term view. It also helps to identify major levels where the support and resistance took place, and also it predicts the future levels, and that is purely based on price action. What it does, it actually calculates the price action and try and identify where those areas where it's very active, and there's some other criteria that was included in there, how to calculate this this major level, which is on highlighted on the solid lines. It works on most time frames, I mean all the way up to M2, M1, but I don't see any reason why we're going to use M1, M2. I mean, I do scalping, but the lowest I normally go is to M3 and M5. But yeah, it still can be used all the way up to M1, M2. I mean, different people have their own, different traders have their own different choices, and I know some of them use the 2 minutes time frame, but yeah, so I mean, it can go all the way to daily chart as well. So I like to look at H4 as a good time frame for me to try and look at the medium term. I also look at the daily too as well. I mean, now and then, just to see what's happening with the longer term time frame. But what I'm showing you right now is the setup, the settings for the support and resistance indicator, which is it allows me to adjust the settings and use the look back bars numbers and trying to find what's best for this particular time frame. For example, I'm dropping in 1,000 look back bars to see whether, so you can see that it doesn't take anything from there. And that shows that it also depends on your data provider, how much data you can get from there. And it's the H4, so I doubt you'll be able to get that much, but I know it's 800 is a good level that I can. So it's going back all the way to 800 bars, and I picked up best option in there. What it does as well is it put more weight on the current prices. For example, if it detects something around back in here on January, and something else happened around April, you know, the indicator will normally look at the current current action and take that into consideration, because I think that's a better way of looking at what's happening in the market. We're trying to look at what's happening right now. I mean, we can still use the past as well, but I think it'll be more accurate to look at what's happening, what happened in the recent days or recent month. Depends on what's the indicator picked up. But as you can see right now, that I've got the support and resistance dropped, and it makes a massive difference on the levels that I can plan my trade. So M4, you can still use it as a bit of a long range kind of thing. Using price channels and breakouts to try and find levels where the market is potentially going to break out. So I find it's much easier to plan my trades having this system automated. I know exactly where to put my stop losses. The dotted lines in the middle are areas where I normally see figured out that prices will normally consolidate around these levels before it breaks out, either takes out the top level and continue, or pulls back and falls below that and trying to find the next support level. The pattern that I'm seeing right now, which is what I'm planning for next week trades, I'm looking at this pattern here, which is an inverse head and shoulder pattern that I'm looking at identifying right now. As you can see, the shoulder, head, and potentially another shoulder will be forming here if it drops below this level. So the level that I'm looking for next week is around 13,638, which is a major support, and the resistance will be around 13,781. So if it's going to drop below 13,638, there's a potential that we could come down and test this level 13,495 and 13,352. So you can see the patterns that I can provided by the support and resistance. You can see 1, 2, 3 zones, and it came down 1, 2, 3, 4, 5, 6. We had a small run up here, which is 1, 2, 3.5, and it came down 1, 2, 3.5 in here, and then it took another one the same length as that one here from the original drop. So yeah, these are the levels that I'll be watching for next week. So I mean, if he breaks that level there, so potentially this is not going to happen. We'll probably attempt to head back to 13,924 and 1406, 1407, which is the previous highs. If it comes down to this level here, we would potentially see a run to the around this area here. So normally the breakout from the deck level after the head and shoulder pattern, it normally has the same length as this this line here, or sometimes it could be half of that. But yeah, so we'll wait and see what's going to happen. I'll be doing some live streaming on Monday, and probably I will touch base on what happened here and update what's happening. And I will try to do that every day, at least touch base on the end of the session and see what's going on. But the next thing I'm going to do is I'm going to drop the auto flow software, and I'll show you how I use that to help identify all my potential trades or plan my trade. The name of the auto flow is called U clusters, and I like this auto flow because it really works with my indicator, which it enables me to drop my support and resistance straight into the auto flow. I've seen other auto flows, and but it's quite different from the way this auto flow has been set up. I mean, I'm not going to go through details of how to use the order flow. Probably I'll do that on another session, but what I'm going to do here is I'm going to touch base on how it works and how I use to identify my trades. So the order flow is basically it shows you the transactions, what happened, and the buyers and sellers. And what I'm looking for in here is the areas where there are high volume transactions. Those are the unusual volume that normally indicates that institutional traders have traded around those levels. So you can see them straight away if you're watching both the order flow and the price chart. It normally, I can identify them straight away. It normally falls around the same levels as the support and resistance level calculated in here, which I'm going to show you in a minute what I mean for that. But the reason why I like this order flow here is, like I mentioned before, it allows me to drop my support and resistance straight into the order flow. There's a function in here that it says I can drop my line charts in there. So there you go. Once I drop that in, it makes it much easier for me to, you know, I'm looking at both charts. I'm looking at the transaction chart and I'm looking at my price chart. Price chart is useful because I can see a longer range in here, and it's got more details in here. Order flow is normally showing you exactly, you know, within a short period, a day or two or three, what's happening in the transaction. So when I'm planning my trades, I like to have them both side by side, so because I'm seeing the same thing on the price chart, and it gives me the advantage of identifying where the the high volume transaction took place. So what I normally do is I will drop a line straight onto where those high volume transaction area, and it will appear on my price chart as well. So this gives me an advantage of knowing where the institutional traders have traded, where they've dropped their positions last. So what normally happens is this level of high transaction areas is the market normally respect these levels, and we will normally see that that market either continue or break those levels and continue up, or falls below that level, and you know, we see a sell-off. Depends on the range of the trade. But like what I'm saying, what I'm seeing here on this price chart here, if this is going to occur, if we're going to fall below this level here, and I think we could potentially come down all the way to 13,352 or 13,498, which is going to be around 13. So you can see that it's a long way down here. So yeah, the importance of highlighting those levels are for me to plan and stay ahead of the game. So I know that exactly this is where the big boys have dropped their trades. And another good example here is if you look at this level here, we had 24 compared to the average around 8, 7, and this indicates that you know, as soon as you see that, you know exactly, I think the market is going to be bunching off from here. Then you can see exactly here 13.6, 38.25 is a major support level. So that, you know, that gives you some confidence of your chances of getting that trade correct is pretty high. So you had 24, 23, and then the next one you see some more accumulations, which is not that much, but you know, the market just rallied all the way up before we had this another massive one there, which is 16.3, 16. Market fell below that, and you know, took out these support levels here and came down, retested 13.638 again. So another thing, seeing the same thing happen here, it's 17.8 right at the bottom here. So usually I normally see this either at the bottom or at the top. So if it's at the bottom, there's a chance that the market's going to bounce. And if it falls around the same major levels that is indicating from the price chart, then, like what I said, your chances of getting a good trade, staying on the right side of the trade, is much higher. In here we had to see the sell-off from 14.5, came down here, had these transactions 17.8 over here. The market kicked off from here and continued up all the way till towards the end of Friday session. We can see 23.6 in here, 15.4. The market drove all the way up. I'm not really sure what happened in here. It could be shorts taken out, or there's all sorts of things could happen around this area. And I think what's important here is to identify this level. If it's up at the top, if you're watching this heavy transaction happening right at the top, there's a potential that it could come back, come down, and cut through these levels all the way down again. So this is a good example. We had 23.6 in here, 18, drove all the way up there, closed up here, continued a little bit, and you can see there's a red transaction up there, which is indicates that the sellers are coming in, selling from there. So it came down 11.8. There's another red transaction there. Passed through this 26.8. 18.3 is another big one here, and then came down all the way up here, closed around 13,693. So that's the advantage of using the order flow. I mean, helps you to identify where the trades, institutional traders are placing a trade, and you don't want to be on the wrong side of trades. You don't want to be on the wrong side where these guys place their trades, because you could potentially run you over. And if you don't have stop losses, if you've got your stop losses a bit wide, it's going to still take you out, whether you have wide or close stop losses. The chances of you getting run over is much higher. So that's very important to identify all these high volume trades. So that's the 4-hour price chart. Let's have a look at the 30-minute chart. 30-minute chart, you can see whole of last week, it was not much. We can see there's a very small range in here. Support level here, it's around 13,614, and the major resistance around 13,738, 13,738 I mean. So you can see this is Monday, Tuesday, Wednesday, Thursday, Friday. So we'll wait and see what's going to happen in there. But like what I said, what we're seeing in the H4, and if it's going to take place, then potentially see a pullback from there. But this other thing that I'd like to use on my analysis, using price channels and trend line, and I like to use the line chart, which the line chart won't show you the wigs or those areas where we normally have. I'll show you exactly what I mean in here. For example, is this one here. So it's not going to show you all those pins up there. If you have those long wigs up there, it's not going to take. It's going to take where the prices normally closes. So I like to do that because I find that it works well with me. I think there's no right way or wrong way of doing this. It depends on if it works with you. Then I think that's what matters. So I like to draw trend lines to see what's happening in the market. I think a lot of traders use that. It's a very simple tool. So as you can see from here, I can see straight out from here that this is a very useful line here, which I'm going to leave this line here. When I do my live streaming or my next update, we will see what happened around this level here. But yeah, you can see that, and there's other ways to try and find out what's going on in here. I will leave that as it is, and we'll come back on the next session update to see what happened around this level. But yeah, I mean, these are the main levels I'll be watching on Monday, Tuesday, and see what happens. 13,676, but it's looking more likely to the market's going to come down. We've topped up. As you could see, this whole of last week we had this very small range. There's nothing much happening in here. So that's the 30 minutes. Let's have a look at the 5 minutes. 5 minutes chart. I like to use moving averages. I know moving averages are lags, but you know, it's another good way of using for your support and resistance. It's pretty useful in sometimes, but yeah, the moving averages that I've got here is I've got 10, 20, 50, 100, 200 and 500, and I find it quite useful. Sometimes I'll use them, sometimes I'll take them out, I mean, and use just a few, but it depends on the patterns that I'm seeing. So these are the main levels that will be. What I normally do is I will consider the higher time frame support level, even though I'll be looking at the M5 for my entry and exit points, but I will take more noticeable on what's happening in the longer time frames like the H4 and the 30 minutes, and I will consider these better levels to watch because as you can see that you know, it's more accurate. But sometimes I'll be able to see the same levels in the 30 minutes and the shorter time frame. Depends on the price structure and how the indicator pulls all those levels. But it'll be very useful if I can find the same levels, looking at the same levels in 3 different time frames. Occasionally I will get that, but not all the time. So yeah, that's the 5 minutes for the Nasdaq 100. Let's jump straight into the S&P 500 4-hour chart. The 4-hour chart has a different price structure, but it could potentially, you know, get the same results as what we're looking at Nasdaq. I'm looking at potentially a drop next week, but like I said, who knows? I mean, all we have to do is plan our trades and see what happens and wait for it. But the S&P 500, as you can see, there's a rising wedge here. So rising wedges are normally patterns that ends up a market coming down, pulling back from. But you can see this prices fluctuate within this, getting shorter and shorter, and sometimes it will break this support level here and come down. So looking at this, if it falls below 4189, 4190, we could be looking at 4145, even to 4102, 4103. So we'll watch and see what happens next week. The resistance level that we'll be looking at here is around 4233, which is in line with the previous highs. And yeah, we'll watch and see. There's another pattern here that I've plotted here, which is the Elliott wave. We had a 5 wave just completed, 1, 2, 3, 4, 5, and like I said, we could be looking at a pullback from here. So that's the H4 time frame. The same thing that I use that in the order flow chart, U cluster. I will plot this this high volume transaction area here. As you can see, the indicators already dropped straight into the order flow chart, and you know, it works pretty well. You can see where those high volume transactions took place, almost exactly as where those support and resistance level. I normally plan my trade and I'll wait and see which one I'm going to trade, whether I'm going to trade the S&P 500 or Nasdaq. Depends on what happens during the Asian session. I like to trade the US session because, you know, you got high volume and faster transaction, so you don't have to wait for that long to get those trades executed. Normally about 2 to 3 hours you should be done. Come back at the end of the session and see if there's any more opportunities. But yeah, that's the order flow and how I use this to look for those major transaction levels, dropping down a few lines where those levels are, and wait and see what happens in there. I mean, as I mentioned earlier, I mean, normally if it breaks those levels, we either break that and head up, or fall below that and we see a sell-off. So these are I'll take the top and the middle one. Don't want to be too congested. And I will see, actually I will leave this there, and I will update when I do the next next session. That's better. So that's H4. Let's jump straight to the 30 minutes price chart and see what's happening there, see if we can identify similar patterns. Oh yeah, I've done this already, but as you can see, there's a rising wedge here in the 30 minutes. So, you know, it's all pointing to a pullback next week. But like what I said, no one knows what's the market going to do next. We'll have to wait and see. But this is, you know, at least gives you some preparation and plan on what you're going to do. I mean, if it's going to break that level, how likely that it's going to break the 4215 and continue to the next level, we don't know, but we'll just have to wait and see. If it's going to break that top there, I think we'll be trading very carefully, and in case, you know, it makes a drop from there and makes a runner down to the downside. Another tool that I like to use is the Fibonacci retracement, and I'll show you exactly how I apply them. Take them from the bottom. If I'm looking for a pullback, take it from the bottom to the highs, pick a point and plot them. The major levels that I normally look for in the Fibonacci retracements are on 38.2. 50 is not so much, there's hardly nothing much happening at 50, but 38.2, 23.6, which is a minor, you know, drop, and if it holds, it probably around this level. As you can see, it's in line with this this level here, which is a resistance or support around this level here. But 38.2, 61.8, and I think 78 and 88.60 are, you know, levels that I normally watch. Normally 61.8 is an important level that we normally see a normal pullback. If it's going to be a normal pullback, it's going to come around to this level, around 61.8. But we'll wait and see what happens, and when I do the update, we'll check out and see where did the market trades. So that's the 30 minutes S&P 500, and the 5 minutes chart. Major levels here: 4212, 4220, and 4205. I normally use the 5 minutes, the lower time frames, from my entry and exit levels, but I normally take the 30 minutes and the 4-hour time frames are the ones that I normally plan my trades to. As you can see, you know, there's a lot of good signals in here. You have a reverse pattern here. I know it's very easy for you to take that, and you know where your stop losses. You can apply your stop losses, and knowing very well that you, at least the market has shown some signs of reversing. And you know, especially at this one here, you can see that it touches the 4058 support, major support level. It managed to hold in there, so that was a good one. Looking back at around this level here, it did the same thing. It you know, dropped all the way up here. It didn't reach this major level here, so that's another good sign that you know, if it's just wobbling around somewhere in the middle of the trading zone, that's a strong indicator that it could potentially, you know, retest the resistance level and become support again and continues up. The same thing normally happens on the top. I use those major levels. I mean, as you can see here, what happened around this level here, the last breakout we had here was stopped out at this level here, the major resistance level around 4233. So the recent rise on the market, it was barely, reaching this medium, these dotted lines here. Dotted lines, those lines are areas where I expect to see the market will normally fluctuate around those levels. So it's either break those two lines and attempt to take out the major level at the top, or fail to come back and retest the support level, the major support level, which is exactly what happened in here. 4189, 4190 was tested many times. You can see that it bounced off here, went up a little bit, tested that, come back, dropped in here. It did come down to the major level here, just wobble around above this and tested that level again, try it again. So we'll wait and see what's going to happen on Monday and Tuesday probably. But yeah, if it takes up this level here, 4189, 4190, I think we probably will be looking at coming down to this major level, 4145. So that's the 5 minutes, 30 minutes, and the 4-hour time frame. My trading plan, my analysis, what I'm going to do next week, and at least I have some rough idea by having this analysis. It plans me ahead of and gives me some confidence on what I'm looking, what I'm watching, what to do, and where to set my stop losses, where my entry points are. I like to wait for breakouts, or wait for stronger confirmation before I take my trades. So I think that will reduce your risk of getting caught up with false alarms. Having stop losses is very important. I mean, to survive this tough environment, you need to have a proper plan, and you need to have a profitable plan, not just a plan, a profitable plan. And this job is not a sprint. This is a marathon. If you're planning to take up trading as your career, I think you need to have a very, very good plan. And this structure that I have here, it helps me a lot to, like what I say, to plan my trades and get myself ready for what's coming, whether it's going up or coming down. You can always profit on both ways of the market. So that's the benefit of having a proper plan, seeing the right things, staying on the right side of the market, and not to be caught up with or get caught with this institutional traders position. So you don't want to be on the wrong side when these guys start rolling, because if you're on the wrong side, you're going to be rolled over. And if you don't have a stop loss, you're going to be hit very hard. I've spent a couple of years of learning this art here and how to survive. I've gone through all those big hits in the past, and I know exactly how it feels when you do that. And having a profitable trading plan is so important to survive. It helps to protect your capital, gives you a good peace of mind. I like day trading because once I'm done, I'm out, and I don't have to worry about anything. That if the market falls tonight or falls tomorrow, I don't have a position. I'm fine. Tomorrow is always another day, and the opportunities always be there and available. Anyways, I'm gonna knock off from here. I hope you enjoyed my trading plan setup, and what I'm planning to do on Monday and Tuesday. I'll be doing some live streaming and updates on what's happening in the market Monday and Tuesday, and I'm planning to continue this. If you like today's session, you can subscribe, give us a like, and you could possibly share my video to help support my my work. My whole idea of doing this is to try and help beginners and those who are trying to find a better way of looking at the market and trading the market. Those who are struggling, also advanced traders, you could potentially look at this as another good tool to add to your toolbox. So thanks for watching, and I will see you in the next session. Cheers.